Thank you for listening to the Real Estate Voice podcast. I'm Vernon R. E. Jones, managing broker, owner of Jones Homes, and for over 30 years, we have serviced the 7-county Denver metro area. Despite the monumental shift in financial conditions that has occurred over the past 4 months, homes continue to sell quickly and registered their 20th week of double-digit yearly gains last week. This is our weekly trends report, and we have a lot to talk about. Last week's Federal Reserve Board statement and post-meeting press conference hammered home the Federal Reserve Board's commitment to combat inflation, i.e. slow it down or tamper it down, acknowledging that the massive shift will eat into demand, including housing. The combination of more sellers listing homes for sale and fewer home buyers able to contend with higher housing costs will lead to growth in the number of homes on the market in the months ahead. We expect this reality should help tame price growth as more options and fewer competitors enable buyers to be choosier. Key findings. The median list price grew about 14.7% year over year. Again, as I stated, this marked the 20th week of double-digit gains for the typical asking price, even though mortgage rates now widely exceed 5%, and home buyers have less purchasing power as a result of higher mortgage rates. Home prices continue to rise. In multiple podcasts and newsletters I sent out recently and last year, I talked about affordability and how important it is the housing market to remain strong. As home prices go up, as interest rates go up, there are less people to buy, so affordability shrinks, and that's not good in the long run for the housing market. However, it is something that has been needed to slow down the price growth. Coping with an increasingly expensive housing market, buyers have been searching far and wide for affordable real estate markets. This has helped push home prices higher in many markets across the country as demand spills into affordable areas, even more rural areas. New listings, basically a earmark of sellers putting their homes for sale, were up 3% above 1 year ago. May not seem significant. It is. New listings are up 3% above what they were a year ago. Realtor.com has something they call best time to list a home for sale was a few weeks ago, which means that we're into that time of year when we see more home sellers hitting the market. And I think that time that they said was April 15th to April 20th. I have to agree with that time. In fact, seasonally, we tend to see the number of listings peak on an absolute basis in May. This year, some may be hurrying up the usual month-long home sale prep timeline to get their homes listed before higher mortgage rates tamp down buyer demand even more. As we continue to deal with home prices start to slow, our inventory is still low, and I have to tell people this because constantly I get asked, is this a bubble? Is this a bubble? Is this a buzzle? A bubble. It's not a buzzle, but a bubble. But I will tell you this. Builders have been building at 75% over the last 10 to 15 years. In other words, they've been building at 75% of their capacity over the last 10, 12, 15 years. 10, 12, 15 years ago was around the time that last housing bubble blew. During that time, builders were probably building at 90, 95% of their capacity. They are now very cautious. That's why our housing supply has not been able to keep up, because builders have been more cautious over the last decade because they didn't want to get caught with a bunch of listings and homes that were they were unable to sell. Homes spent 7 days less on the market than they did this time last year, with inventory still relatively limited and mortgage rates climbing. Home buyers intent on making a purchase are still incentivized to act sooner rather than later. I would tell you, act sooner. Because the reality is, Federal Reserve Boards continue to bump up rates. Understand, they're largely messing with short-term interest rates. And usually they run an opposite of each other, mortgage rates compared to short-term rates that the Federal Reserve Board deals with. But they still affect each other, especially now in a high inflation, high home price market. Do I expect mortgage rates to go up higher? And if you've been listening to any of my podcasts and reading any of my e-newsletters, I expect them to go up 5 to 6 times this year. Will it be 1/4 of a point, or will it rise 1/2 a point per rising? That is still to be determined, largely based on how these current rate increases are affecting inflationary issues. Thank you for listening to the Real Estate Voice podcast. Any questions, please call us at 303-359-8218. Otherwise, as always, please be safe.